Here, let's do some back testing, guys. Hello, hello, this is Spooky's Revenge. We're back for another $500 5-year series episode. Let me get my face out of the way almost immediately. All right, so just to recap the portfolio really quick, because I like to do these for every episode. Took a bit of a spanking on a SPY trade, but it's okay, right? Because it's all within the loss limits. And if we look here, we can see that there's still nice upward trend because of the way I'm doing this. So I don't have to care about it. All right, so with that said, let's get into a strategy really quick because I want to kind of make this video as brief as possible. Now this involves using the ATR, or average true range indicator. It's come up a couple times in conversations. So what's going to happen is I'm going to record this portion of it. Then I'll pause. I'll make some adjustments to the chart to walk you guys through a different approach using the same indicator. And then I'll resume the recording, and it'll be the first episode here that's spliced up a little bit. But let's go ahead and just get into it. So the ATR, average true range indicator, is just an indicator that shows the average of the maximum distances between 2 points across candles. So basically, like if I look at if I look at these two candles right here, for example, I could see that their maximum true range, or the maximum distance between them, is from this high to this low. And for these two candles, from this low to this high. It incorporates for gaps, all that good stuff. And it plots the average over a given look-back period of 14 candles by default. Down here is a number, which is unbound. It's just an absolute dollars number that we can use to assess the expected range of the candle. And basically all it does is it just takes the volatility over the last 14 candles. It plots it as a number, so we can see on average about the rough size of all the candles. And then that kind of sets the tone for where the price should go for the current candle. That's the idea behind it. Obviously, the ATR can be increasing or decreasing, which means it's going to increase or decrease that volatility. So we're going to get bigger or smaller candles. So it's not like a, it's not something you could just use by itself. So let me get my face out of the way so that you guys can kind of see the whole picture here. So on the, I'm just using the same strategy I've been teaching. I use the 5 and 15 minute. Two different time frames. On the bottom one, I've just drawn a vertical line. This is during regular hours only. I'm not interested in extended hours unless it's a low float runner with a lot of volume. And all I've done is every time there's a signal on the 15 minute, I'll just draw a line. And of course I could have caught, like, there's much better data over here because it's more directional, but I just started here for the last couple days. So Friday through today, which is Thursday. So about a week's worth of data. So every time there's a bearish signal on the 15 minute time frame, I draw a red vertical line. So I got 5 of those. And then every time there's a bullish signal, I do a green vertical line. So 1, 2, 3, 4 of those. Okay. And then on the low time frame, the line persists. So I can see what the overall trend bias is from the higher time frame while I'm looking at the lower time frame. So if you're someone that just has the free subscription, you can just toggle back and forth after you've drawn the lines, just stay on the lower time frame and look for signals. The second part of this strategy is just looking for signals on the lower time frame in the direction of the trend bias. So in this case, you can see that there's a red line here, which means that this bearish signal in the 15-minute time frame shows us that the trend should be going down, which it is. But we didn't see a bearish entry signal. So there's no reason for me to have taken a trade in this block. And this one here is a bull signal, but it's in bearish bias, so I can ignore that. Okay. And on the green line here, the trend turns bullish. So at this point, between this line and the next line, I want to look for bullish signals. So that's what I did here. Give me 1 second. All right, I had to take a quick detour there. So as we can see here, that we're looking at a bullish trend or bullish bias, and then on the low time frame here, we get a bullish signal. As soon as this candle closes, I look for an entry, and the idea here is that we're going to use a different type of stop loss. This is meant to constrict the price action, using it this way. So that we have tighter trades. Yes, that means capped profits, but it also means capped risk. So in this case, we can look at the ATR for the previous candle, right? The candle that is fully closed. So in this case, it's a 12-cent ATR. It might be a little hard to see, but it's right here on the screen here. So if I hold my mouse over this candle, the signal candle, it says 0.1208. So that means that the ATR, or the average size of those candles, is about 12 cents. So as soon as I enter, I can set the stop loss range for 12 cents. so 12 cents below the entry. And I'm using a 1 to 2 risk reward ratio, so twice that size to the upside, so 24-cent profit potential. So in this case, it hit the stop loss, and that's okay, right? Going to move into the bearish signal here. No signals, right? Because we don't have a low time frame entry signal. We just have the high time frame bias line, okay? And then we go over here, and we're in bullish territory, but the first entry signal I see is right here. So I do the same thing. I just repeat the process. I wait for the bull signal on the lower time frame to close, and then I look for an entry on the open of the next candle. And holding my mouse over this, you can see, if you look right here, the ATR value is 12.45 cents, or 0.1245. I rounded it up to 13 cents. I could have done 12, but just for the sake of doing this, I set it to 13 cents, which automatically means a 26-cent profit potential. In this case, that stopped out as well. Okay, so we're looking at 2 losses so far. Then I got another bull signal right here. Sorry about the stretching here. It's kind of awkward because the opening candle gapped up. So we got another bull signal here. And remember, we're in a bullish trend. So I'm just looking at the bullish signals. So I wait for this candle to close. Take note of the ATR. It's 11 cents. Enter on the next candle. Set a stop loss 11 cents down. Take profit twice that size to the upside, so 22 cents. And let it go. Got another one right here for another trade opportunity if we wanted to do that. The ATR is 10.7 cents, so 11 cents on that one, which means 22 cents to the upside. And in that case, both of those would have hit target after hours or pre-market, I assume. And that's that. So 2 wins. So far we've got 2 losses, 2 wins. Easy enough, no stress, no questions, no guesswork. It's beautiful. And then since we're still in the bullish state right here, we get another signal right here. So same process. I look at the ATR value. I wait for that candle to close. As soon as it prints a signal, I look for an entry on the next candle. ATR value here is about 17 cents, which means a take profit of 34 cents because of 1 to 2 risk reward ratio. Easy peasy. I don't care about this bear signal because I'm in a bullish trend, so why would I look at bear signals? Got another opportunity right here. So this one is a 17-cent loss. This one ended up being a 14-cent loss. So we're looking at 4 losses, 2 wins so far. Then we enter a bearish state. So then I would start to look for bearish signals. In this case, we got one. Just repeating the same process. We have an ATR of about 13 cents. Take profit of twice that, 26 cents. That one hit. So we're looking at 3 wins, 4 losses now. Then we enter a bullish state, but I don't get a bullish signal. Then we enter a bearish state. I don't get any signal. So the best part of this is it keeps you out of the trade when stuff is like sideways. Then we very briefly got a bull signal. We could have looked for this, but at the next candle here, it turned into a bearish signal. So there's no, or a bearish trend, I'm sorry. So there's no entry on this one. So now that we're in a bearish trend, I'm just looking at the bearish signal here. And rather than putting the stop loss all the way up here, which is where this strategy really shines, it takes that risk and it brings it right down to here. So if we look at the ATR on this one, it's 12 cents. Wait for that candle to close, look for an entry here, set the stop loss to 12 cents, the ATR, 1 times ATR, 2 times ATR for the take profit of 24 cents, that one hit target. And then we have another bear signal here. This one is undetermined, it's not closed yet because it didn't hit the profit or stop loss. So if I bring this over here to my handy dandy notepad, okay, I've calculated all the results. We've had 4 losses and 3 profits. And a lot of people might be freaking out, like, oh, that's less than 50% win rate. That's okay, because we're using a 1 to 2 risk reward. And our 4 losses here were 12 cents, 13 cents, 17 cents, 14 cents, for a total of 56 cents worth of losses. And our 3 profits here were 22 cents, 26 cents, and 24 cents, for a profit of 72 cents. So even using this strategy, even though they're very, very tight trades, we're still net positive. Okay, so that's the idea here, is we're just keeping things tight, but still net positive. Now, I'm going to pause this video because we're going to adjust the time frame a little bit, and we're going to adjust which ATR value we use, and we'll have a slightly different result. So let me just pause and I'll come back. And we're back. So we had to splice this a little bit because it took a little bit of time for me to draw the lines. All right, so the adaptation here is twofold, right? First, we can push the time frames apart. The 5 and 15 are very close together. We could try it with the 15 and 3. I just prefer to have at least 2 time frames between the pairs. That way they're not like right on top of each other, and the difference, more specifically the trend bias, is more meaningful. Okay. So in this case, I just kicked it up to the 30-minute and the 5-minute. So the other part that we can use is we can apply the ATR to the higher time frame, because that's where the volatility that we're trying to capture exists. So this is a way to open up the trades a little bit more, the ranges, I should say. But if there's a lot of chop and the chop is violent, this won't work so well. But if it's nice and directional like this, it's awesome. So let's go ahead and look at the numbers here. So first off, we just started here again on that Friday. And I didn't put these in, though they would have been winners, but I just kind of wanted to isolate it to just the Friday, right? Because I don't want to do Thursday to Thursday. But on the higher time frame, this is the last bullish signal. So I'm just looking for Friday bull signals beyond that with a ATR value of the 30-minute time frame. So in this case, if I hold my mouse over this, or if I just put my mouse right here, and I look down there at the bottom, I can see it's a 50.10 cent ATR value, so a risk of 50 cents. 2 times that to the upside for profit, so $1 ATR. And of course, in this case, if we had a little more experience, we could have just used the lows of each candles, but just for the sake of being consistent, that would have been $1 profit. Then we enter a bearish bias, so we look for bearish entries. I got 1 and 2 of those. This one here, the higher time frame ATR is 46 cents. So we set a 46 cent stop loss and a 92 cent take profit. In this case, it would have been a stop out. Same for this one, just would have been a stop out. Because they're close together, it's the same ATR value, so it's the same stop loss 2 times. All right. Then we enter a bullish scenario. And we actually get 3 entries in a row, and they all hit targets. So there's 84 cents. And to justify this, I'm looking here, right on the entry candle, and I'm looking at the ATR value down here. So I don't know if you guys can see that very well on the recording, but this is the entry candle. ATR is 41.88, which means it's 42 cent risk, 84 cent profit. So I do that on this trade. This entry here as well, signal here, ATR value is 39 cents, 2 times that is 78 cents, so that one hit target, 78 cent profit. Then another one, 38 cent risk, 76 cent take profit. We're still in a bullish state here, so we enter here with a 40 cent risk, 80 cent profit potential, we take a loss. This one here, 39 cent risk, 78 cent profit potential, we take a loss. So you can see we're taking some wins and some losses here. And I personally hate Walmarts. So it's not the best chart to trade for this particular time pair. And then we enter a bearish state on the higher time frame. So we have a 40 cent risk, so 40 cent ATR value, 80 cent profit potential. Clearly we hit the stop loss on that one. We enter a bullish scenario here, and we don't get any signals besides this one, which we kind of know is already problematic, and we wouldn't have been able to use that because it would have been a bearish flash in the high time frame. So that's one of the rules that we can obey. So we enter that bearish state, then we get a bearish signal on the very next candle. So we enter here, and it's unresolved because it didn't hit either target. So 41 cent risk, 82 cent take profit, but neither of those levels got hit. So therefore, this trade is unresolved. All right, so if I bring these over here, you can see I've got the old ones down here. All right, and then I've got the new ones up here. So the ones I just walked through are right up here. So first trade was $1 profit, then I took 46 cent loss, 46 cent loss, 84 cent profit, 78 cent profit, 76 cent profit, 40 cent loss, 39 cent loss, 40 cent loss. And then the last trade was undetermined. So if we add up all the profits, we get a 338 value price range, so $3.38. And then if we add up all 5 of the losses, you can see again, we have below 50% win rate here, and we're still net profitable by almost a third, or by 50% of what we're losing. So in this case, we add up all the losses. They're smaller because we have that 1 to 2 risk reward, and it's 211. So 338 over 211. I think we had a pretty good net result there. We had a pretty good net result here, and that's just 2 pairs of time frames, 2 different sets of ATR. And I personally prefer to use the high time frame ATR for this because it pushes those profits that much further when they do hit. And if the trend is going in that direction overall, that should hit more often. But again, I just hate Walmart. This is why backtesting is important. Once you identify a ticker, you can identify ideal time frame pairs, and then you can just make a note of those. And then when it's time to trade that ticker, you can pull up those time frame pairs, and you can do stuff like this and make much more efficient money. But you got to kind of put in the work for that. So I don't want this to be a Stocks Buddy or ATR specific strategy, but it just goes to show you that the benefit here is in risk reward and understanding trend bias. So you don't have to be like a master technical analyst here in order to make a profit. You just have to have some common sense rules in place. So in this case, we took a riskier setup, which is the 5 and 15, and we're using the 5-minute ATR value for very tight profits, very tight risk. We expanded that down here to use the higher time frame ATR value, so we're opening up the risk range and the profit range. And we're using a higher time frame than the 5 minutes, so we're spreading out the time frames to get a higher time frame bias for the 5-minute chart, because they were just a little too close together with the 15 and 5. So I've rambled enough. It's time to end this stream, and I will catch you guys next time. I'll have to splice this together a little bit, so it'll be a later upload for the day, but I just wanted to walk you guys through that. And as always, feel free to ask questions. I'm going to live trade tomorrow in Pennybois, so if you guys are there, I'll see you there, and I'll kind of do the same thing. I'll just do this on live stream, and we'll catch you guys later. Thanks, and bye.